Hello and welcome to another update video about Ethereum. We want to start here on the daily time frame, take a look at the overall wave structure. And yeah, this chart has suffered a strong decline in the last few days. Obviously, we had this rapid sell-off into the Monday lows where the price formed a local low at around $2,100. And the recovery has been profound from the lows. The market has recovered round about 30%. We continue to see difficult patterns unfold on the Ethereum chart. Ethereum's chart is not impulsive to the upside from the 2022 lows. We talked about that before. This, at best, can be considered a so-called diagonal structure. And these are difficult structures to deal with. They don't really indicate strength. And the trend is still up, clearly overall. But in diagonal structures, the buyers are not necessarily the strongest. Well, they are the strongest, but not like very clearly, and certainly not comparable with a rally in a third wave. So you see structurally the difference between an impulse and a diagonal, right? I mean, nobody can deny that. An impulse is rapid. An impulse does not show overlapping price action. Whereas a diagonal structure, which many altcoins show, by the way, as well, which is why this crypto cycle feels different. A diagonal structure is not only more difficult to track from an analysis point of view, but also difficult to trade. So that is why this cycle feels so different to many. Not a surprise to Elliott wave analysts because, I mean, it's clear it's a diagonal. It's been clear for a while that this is a diagonal. So it's, you know, you can explain it. A diagonal structure is one of these Elliott wave patterns. Obviously, we take a look at the chart from an Elliott wave sentiment-based point of view. Only sentiment affects prices. It's about the buyers' decisions, the sellers' decisions, and they are only made based on their sentiment, fear and greed. That's all. These are the two emotions that drive prices. It's not the news. Okay, it might be a catalyst. Okay, if the chart, however, has an underlying problem, then a catalyst can lead to a rapid sell-off, for example. Something that the chart allows for when we are in a fragile pattern like a diagonal structure. So ultimately, it's just a very, very fragile pattern. The idea is still that we could get new all-time highs, but certainly that dip has done a lot of damage. It hasn't destroyed the chart. So the wave pattern, you can say here on the daily chart, is unchanged. We can still follow it. But obviously, these dips, these corrections are a warning. The main support area that we're tracking here on the daily chart remains untouched, or at least not broken. So what we have on this chart is this area between 1800 and 2100. I think it's been on the chart since March 2024. This is an area that ideally wasn't going to be tested anymore, but it seems like that, well, it's still needed. So 1800, you know, if the price forms one more low, then the $1,800 level, the 61.8 retracement, is sort of the last support I can offer here for a bullish market. The current idea is, I mean, we have two wave patterns we're tracking. We have in the white scenario, the price broke briefly below the 2,400 level, but there is no sustained break below that level, okay? So there's no sustained break, so I still give the bulls the benefit of the doubt, especially as long as we are still in a bullish market. But yeah, essentially in the white count, we could be in a fifth wave to all-time highs. This is an A wave, a B wave, and next we're starting the C wave. But the condition is now that we're holding the this week's low. So that's the condition. Then we could go to all-time highs. I need more evidence for that, so we need a little bit more upside momentum. We need to see if now the next pullback, that we see on smaller time frames potentially develop, if that's holding a higher low. If it's not holding a higher low, there is still the chance for an overall bullish structure even with one more low, but then the price must hold above 1800. That's really like the final level. Below that, I assume we are in a bear market. Now, ultimately, with this messy price action, different patterns are possible. I could even see this develop as a triangle pattern and then go up, okay? That's why see this as key support. It's not broken. The break below the 2,400 level, though, is a warning, but it's not a sustained break. There are basically two support areas here, one ending at 2,400, broken but only briefly, not a sustained break, not invalidation, but on the larger time frame, just the larger time frame pattern, that allows for a reset of the larger wave 4 here, but then 1,800 must hold. The problem is we have fallen out of the channel, and okay, not a sustained break, but if the price sustains and stays below the lower boundary line of the channel, that's obviously a bit of a concern, yeah, as well. It indicates weakness. Okay, and if we now take a look at the smaller time frame, this already shows, I mean, we're observing now, we're watching, I would say simply watching. There's not much to do at the moment as far as I can tell on this smaller time frame. From a trader point of view, I mean, different ways to trade it, but from an Elliott wave trader point of view, it might be interesting to look for a position in this support area. It's just that this is not the most beautiful 5-wave move up. My communication would certainly be around this support area, and that should the price dip into this area, this is an area where we can watch for support between $2,277 and $2,588. Any sustained break below 2,277 would, however, probably indicate that we're heading down for one more low to test the 1,800 level. I don't think I've got this actually on this time frame there. Yeah, so it would be this extended wave 4, which consists of a wave 5 to the downside in wave C. Okay, as we just saw on the larger time frame. In the short term, I think it is quite probable that the market could test this area in a wider wave 2. I mean, is it a wave 2? That's the thing, you know. I'm just showing the support area. It could be a wave 2. It's just that the wave 1 isn't very clear. It's not a clean 5-wave move. I can visually see 5 waves, but it's not really great in terms of structure, which is not unusual after a rapid sell-off and swift recovery, because we don't know what happened in the candle here. There's just not enough structure, right? But it's more about, okay, I give you a set of fib levels to watch. We know that below the 78.6 fib level, it's typically not going to hold. And the pullback so far seems corrective, so this looks a bit like a 3-wave move down to me, 3-wave move up. One more high would be better for a more bullish outlook, right? Because then the market would also break above initial resistance. You might remember from yesterday's video, the 2,910 resistance level, we haven't broken it yet. So that would be additional evidence that some kind of a low has formed. For now, we have actually rallied only in a questionable 5-wave move, which I wouldn't rely on, very questionable. And then we haven't even broken above resistance. So the parameters for today should be clearly defined. Support is between 2,277 and 2,588. And the break below, let's say yesterday's low there. No, it's not yesterday's low. It's today's low, early morning low, UTC time. Below 2,660 should indicate the C wave is unfolding. That's the update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thank you very much. Bye-bye.